The broadcast is now starting. All attendees are in listen-only mode.
That's right. On the threshold of breaking tonight. Open to everything happy inside. Seeing the good when it's all going bad. Seeing the sun when I can't really see. Hoping the sun will at least look at me. Focus on.
Good morning. Good evening. Wherever you guys are tuning in from, my name is EP. Thanks for joining me for another Trader's Workshop brought to you by thetradingroom.com, number one source to be a more logical, smarter trader on the planet. Hope you guys enjoy this one. This is going to be a great one that's going to really kind of bring a lot of things together if you've been following the series over the last several weeks. This kind of sums it all up and brings it all home and kind of puts all the contents into a box and shows you a place of precision on your entries. I'm going to pull up the agenda here in just a minute. Before I do, let's jump right into the risk disclosure. Make sure that everybody's up to speed on the hypothetical. You guys have probably seen this 5 times already today. Make it the 6th. Make it the most important. Just make sure you know it. Talking about risk, make sure you guys understand the risk and the fact that past performance is not indicative of future results. Okay, so some house rules as I have the agenda up in the background here. There is a question box at the bottom of your go-to webinar toolbar. Go ahead and use it. Send me questions through at any point in time. I'll get to those questions as soon as I can. There'll be some times where I'll just kind of pull to the side and answer things up. There's going to be some interaction here. I definitely like the interaction, so I'm going to put a few polls up, have you guys give me some feedback. But really, these workshops are for you guys. So you come into the lab and you're with me in the trading room. You probably have some questions. Well, this is the place where you ask those questions. You can ask the questions in the trade lab as well, but obviously, we're scouting trades, and sometimes it's pretty darn busy in there. Other times it's slow and we got nothing to do but talk. But the workshop is really about learning something new and going and applying it inside of the trade lab. So today we're going to talk about how to think like a quant, what is involved, trade inside the box. You guys always hear the expression about trading outside the box. Well, we're going to be trading inside the box today. It's my job to show you how to build the box and how to apply the right entries with buy and sell stops and how to scale out. And outside of that, I think we're ready to rip. So if there's something outside of what I talked today, if there's like another topic, if there's some other things that are just kind of have you scratch your head, by all means send an email to any one of us, and I'll have some contact information to provide to you at the end of the show tonight. So my objective, as usual, is to always keep you guys in here for an hour. I'll be watching the clock, and I think tonight that should not be a problem. So let's do a poll. As I said, I like to punch things up and just kind of get a feel for who I have in the trade room. It helps me kind of understand who's here, what kind of trader you are. So the first question is, how would you describe your trading dependency? And so I'm going to launch that right now. And you guys should have just take a minute to go ahead and fill in an answer there. You got 3 options. Are you a full-time trader, part-time trader, or none, only just considering at this point in time? So do me a favor, take 10 seconds and fill that out. It helps me kind of gauge who we have in the crowd, who's here. Give you guys another couple seconds there. And it looks like, for those of you participating, thank you very much, that a majority of you guys are, like myself, a part-time trader. Very cool. Okay, I'll share those results out with you right after we get after one more. Here's the next one. And the next one is, how would you describe your trading dependency? Is that the same question? Sorry, guys. No. How would you describe your trading dependency? Actually, I had another question I want to ask you guys, but it's not in there, so don't even worry about it. It didn't make it to the poll. Failure to launch. We'll get back after it. Maybe I can find it while we go, and I'll punch it up a little bit later. All right. So for now, we're done on the polls. Let's get into it. I want to start with the quantitative thinking here. So we got three different perspectives that you need to take into consideration as a quant. We're looking at technicals, we're looking at fundamentals, and we're looking at some logical. Now the technicals, you guys already know what it is. It's what you see in the trade room. You see me working with the levels. That's our core. The indicators, whether it's the dynamic market sentiment indicator. I'm going to show all these tonight, by the way, if you haven't seen them before. Whether it's the accelerators that are atop or below the candles. Maybe it might be the channels, looking for a specific channel breakout. These are all part of the technical indicators that are part of our RQ trading technology, and that is kind of like automated. We don't have to think about it because the indicators are created for us. So we're not having to draw on a chart some Fibonacci levels or some bands or support and resistance and trying to, put the right inputs in and trying to create everything where you got 20 different lines of spaghetti on a chart. It's all done for you. The technical part of it, the technical analysis is done for you. We've created that. Actually, Joe Rios has created that, and that's all applied for you. The second part of a quant in terms of quantitative thinking is fundamental. So that's why you hear Joe in the first 30 minutes when he opens up the room talking about market cycles, talking about setups that happened in the London session from the previous night. That's why you hear me talking about reports that we have out coming forward. Such as today, the inventory report on crude oil. Tomorrow we have gas, we have jobless claims. These are all part of the fundamental things that are happening in our world. If you take a look at news flashes that come across, maybe it's a president of one of the countries that's throwing some news out there that creates a domino effect. Think about what happened today with Powell. Today is the 14th of, make sure I got the date on that. Today's the 13th of May. And we had Fed Chairman Powell talking, I think it was right at 9 o'clock this morning Eastern time. And one of the markets that we trade, gold, just made this huge move in like 3-4 minutes. And then once he was done talking, like by 9:30, I think it was, stock market opened up and that market completely retraced right back to where it started. So fact of the matter is you have to be aware of fundamentals that are in the marketplace because that can really change your trade. It can make or break a trade. The third thing to take into consideration is the logic. So when I talk about logic, you guys see me do this in the room. I pop this up right here. This is the logic that I'm talking about. And this logic right here just allowed me to get rid of some of the things that we had on from today's trading. The Dow and the gold, I think it was. The logic would be sentiment, trend, what's leading and lagging, what our market analyzer with the Ninja Trader is showing us that we institute the RQ Tech. And of course, the RQ Tech is this guy right here. It's going to help me identify what's leading, what's lagging. It's a live market right now. We've got Bitcoin up at the top, followed by gold, followed by bonds, followed by the big gold, Japanese yen, 10-year notes. If I click on net change, there's our laggards: natural gas, S&P, the micro S&P, mini S&P, the Dow, NASDAQ, micro Dow, mini crude. So that's the Architect. And then, of course, location. Location is everything, right? By now, you guys have all seen the basic videos. Some of you guys that are just contemplating membership, this is really for you. If you haven't seen this, then you've skipped a major step. If this is the first time you've seen this, you've skipped a major step. But we have to identify if we're in a bull zone. If I'm going to be selling something, am I selling something in a bull zone? Am I selling something in a bear zone? Ideally, I want to sell at the beginning of a bear zone. Ideally, I want to be buying something at the beginning of a bull zone. There's additional entries to buy. There's additional entries to sell if and when, and these are all parts of the questions that we ask ourselves as a quant. What's the quantitative value here? What's the logic? What's the technical analysis show me? What is the fundamental analysis? And, for me, a guy that's been doing this for 20 years, I can do this like in seconds. For you guys that are just starting out fresh, it's going to take you 5-6 minutes to kind of put that together, which is why I highly recommend for newer traders, highly recommend you trade a 5-minute chart. Give yourself plenty of time. For example, in this little sample of a sell-off that took place in the bear territory, you had 5, 10, 15, 20 minutes, actually 25 minutes when it started going from the bull territory into a neutral trade zone before it went into the bear territory. It's either going to do one or two things. Market's either going to bounce and go higher, or it's going to go sideways for a little bit and then drop off, right? I mean, duh, 3 things a market can do. It can go sideways, it can go up, it can go down. What we're trying to do is we're trying to show you where the odds are in your favor. That's why when you guys come in the lab tomorrow, some of you guys that saw it today, when I pop up this little worksheet here and I talk out loud, hey, okay, guys, we've got a Dow trade. Before I put a position in, let's talk about the odds. Are they stacked in my favor? What's the sentiment? The sentiment today, guys, was risk off. Risk off, look at this column up here, column B. I want to be selling things in red, buying things in green. Well, the Dow, if I got a short opportunity on the Dow, I got a risk off sentiment, give myself 1 point of credit. So it's either going to be a 1 or a 0. I give 0 credit if it's not stacked up, a 1 credit just for a little system for me to identify if it's a low or high probability. If I'm selling at the beginning of the bear territory, give myself credit. If it's a counter trend trade and I'm selling in the bull zone, I'm not going to give myself any credit. Okay, that's how it works. If it's a leading market and I'm thinking about selling it, you better have darn good reason. I can't think of anything. Maybe the RQ Tech is giving me some weakness on a market that's been all green. And right now, as an example, in a live market environment, look at let's look at the British pound. It's at the bottom. British pound is a net negative change of 0. It's weak on the 1 hour time frame. See the time frames up at the top? 1, 3, and 8. Weak on the 1, strong on the 3 and the 8. Maybe it would make some sense to sell the British pound if it was a market that was leading, but it's starting to toggle and turn weak on the 1 hour. If you don't have that, there's just no logic to take a short on a market that's been a leader. So, I'm not going to spend any more details on this, but I just want to make sure that you guys are able to connect the dots in terms of the logic that I'm speaking of. So getting back over to the quantitative thinking, it's, again, based on those 3 principles, okay? Next thing I want to talk about is the contents within the box. I'm going to actually spend a lot of time tonight. I'm actually going to ask for you guys to volunteer some markets out my way, like throw them out. Hey, what market do you want to see? And I'm just going to randomly, call your name out. I'll call your first name, and I won't call out your last name. We'll keep it private, but I'm going to call your name out and say, okay, Bob wants to see the gold. But the reality is I'm going to spend a lot of time building the box for you guys tonight. And when I build the box, it's going to have the contents here. It's going to have channels. It's going to have accelerators. It's going to have the navigator. It's going to have the RQ Tech, which I just got done showing you. And when I build the top and the bottom of the box, guys, that's already done for me. The RQ levels are already done. They are the same levels for an entire 24-hour period. Those levels I just had up that I was just sharing with you, they don't change for 24 hours. They change at midnight. And so the half of the box is easy as far as building it. The other half is based on the sides, the left and the right side. That's based on prime time. Now, if you guys saw the workshop specifically on prime time, you already know what the sides are. If you don't, then take some notes tonight or pause this video and rewind it a few times and get it down, okay? Because we're going to be talking about London session prime times, U.S. session prime times. There's about 3 of them in the U.S. session you need to know, and then even an Asian session that I actually took a trade on last night on copper. So, there's certain markets you should be trading based on those prime times. And I'm going to show you how to build a box and bring it all together for you tonight. So we're going to be talking about these rules of engagement. Specifically, I'm really going to drive in and talk about entries and exits. Okay, let me actually just go back here. Entries and exits. So we go back over to the agenda, stops and the targets. Where to place the stops, where to place the limit orders for targets. That's all going to come down tonight, and I'll really be spending most of the time building some charts for you guys tonight. So let's go ahead and do what I just asked a little while ago, which was to ask you guys for some of your favorites. So what I'd like everybody to do right now, whatever market you tend to find yourself trading the most, or it doesn't matter to me, any market, any futures market, I'm prepared with the Ninja Trader tonight. I have futures data. So any futures market, if it's a currency, it's an energy, it's a metal, it's a stock index, maybe it's Bitcoin, I don't care what it is. Just give me the symbol right now, and I'm going to take the first three, and I'm going to pop them up on the screen, and I'm going to start building some boxes for you. So I'd like everybody to just take 5 seconds, put your symbol in. If you don't know the symbol, type out the actual name of the contract, the name of the market. So please do that for me now. Okay. Now what I'm going to do is I'm going to actually start with a fresh chart, what I like to refer to as a naked chart. No indicators on it, no scribble, no scratch. And I'm going to start building some boxes for you. Okay. Bring that down. And a few of you guys, as luck would have it, it's kind of a no-brainer. I always get a handful of people asking about the S&P. There's a mini S&P. So thank you for the participation, Ron, Emma, and Dwayne. All right, we're going to start with the S&P. I've also got some people asking for the NASDAQ, the NQ, and I have some people asking for the micro Dow. Thank you for those of you asking for micros. Good job, Greg. If there's another market you want, I think I'll have time. So far, I got the S&P, the Dow, and the NQ. I'd like somebody else to ask for something. Oh, Cassie, thank you. BTC, Bitcoin. God bless you. We're going to put Bitcoin up. All right, so I think that's enough. If I have time, I'll do some others. I'd like to get a currency in for you guys. I think that'd be cool. Maybe we can go take a look at the Aussie or the pound or something. Okay, so let's start with the S&P. All right. So here is the S&P. Again, nothing on it. That line that you see over there, the only thing that is actually indicating is when the day starts, okay? And that's when our levels reset every 24 hours, as I mentioned earlier. So as I look at this chart, I'm going to squeeze it here for a second. There's the last 2 days. Here's the last 3 days. Let me take some things off of it that shouldn't be up there. My fault. No big deal. Okay, so we got today's Wednesday, Tuesday, Monday, and before Monday was the Sunday session. Actually, that was Friday's session. I don't have Sunday on there. You see that gap right there? That was Sunday. So Friday gapped higher on Sunday. We opened up Sunday night, Monday morning, whatever you want to look at. And pretty safe to say that, hey, you know, everything's been rolling for the stock market, more or less the S&P. But yeah, you know, finished up around 29. I can't see it because my toolbar's in the way. 29.40, roughly. 29.40 is where we opened up Sunday night, Sunday morning early, and we're trading as low as 20. We'll say sub 2,800. It's a pretty big move in 1 week, right? And you could have people say, "Oh yeah, you know what? There's a line in there. You know what? There's a double top up here. There's a, you know, we met an SMA. You know, this is where I would have sold it. Here's where I would have bought it." I'm not going to do that. You guys know I'm not going to do that. That stuff is like lame. Those are the quacks. No quacking here, man. No quacking, no yakking. We're just going to go to work. So here we go. I'm going to go with today. Keep it really current. Today's the 13th. And I told you earlier to get the tops and the bottoms. The levels do that for me. I'm going to right click. I'm going to go into indicators. Okay. And what I'm going to do is I'm going to scroll down until I get to RQ levels. RQ levels. Now I actually have a template where this is all ready to rip. It's all ready to go. And I usually just go to my template, but I thought, well, I actually want you guys to see how it looks when you do this from scratch. And actually, you can see there, some of you will have RQ levels, some of you will have NOS levels, some of you will have a Gnostic NT7. That's actually what I have. Joe's had this coded over the last 20 years 2 or 3 different times for NinjaTrader. As NinjaTrader changes, he has to change. And I understand that he's having it coded for NinjaTrader 8 right now. Don't hold your breath. Nobody's in a rush for it. I talked to NinjaTrader already, and they're not changing or leaving NT7 behind anytime soon. And I don't want to change to 8, and I don't plan on changing it to 8 until I have to. Okay, so I'm going to have the levels right now. Going to double click on that bad boy and apply it. Now I've got 5 days of data. This is a 5-minute bar. And by me adding the Gnostic levels, or as we refer to them, the RQ levels, they should populate here in just a second. You can see that crunching some data on the computer here. And there they are. Okay. I also have yesterday, so you can actually see the change in the levels as they change every 24 hours. So yesterday's bull bear was there, and at midnight they changed. The bull bear came down. Critical resistance went up. Critical support came way down. Okay. All right. So we now have the top and bottom of our box. And what I want to be able to do is I go forward to trade, like right now with the Asian session just opened up for prime time literally 23 minutes ago. It's 8:23. Yeah, 23 minutes ago. So if I was going to trade the prime time, and I would not be trading the S&P, by the way. I'd be trading like copper, gold, Aussie, yen. Those would be markets I'd be trading. I'd be putting a line right here, getting ready to trade that session. So I'll actually do that maybe for gold when I'm done with this exercise. But for right now, I have to understand what the prime times are for the U.S. session. If I was going to trade the U.S. session, I'm going to start looking at 8 o'clock for a prime time to trade. And the other prime time is going to be 11 o'clock, which is right there. Okay, so there are the sides of the box. I'm going to widen this out by left-clicking on my mouse and scrolling on the bottom axis. Little NinjaTrader trick and tip there for you. And now I've got the box coming together. I have the top, I have the bottom, I have the sides. And I'm going to use what on my keyboard is going to be a Control F12. And watch what I'm going to do here. I'm going to build the box for you. Right there is the box that I'm referring to. The inside levels and prime time. That's all we're going to focus on right now. And what I'm trying to do in this workshop is I'm trying to help you guys identify, yeah, but where do I get in? Do I get in as soon as we start to climb in? Do I get in when I have one of these numbers at the top of the candle or the bar? There's a 3, there's a 5, sometimes you have a 1. Do I wait for a 1? I get this often. Hey, EP, do you wait for a pullback and then get in? So the answer to all those questions is yes and no. Okay, so I'm going to make it easier for you. 3s are a sign of neutrality. 5s are a sign of acceleration. So would I have gotten in on this one right here? No, I don't have an accelerator. Would I have gotten in on this one with a 3? No, that one's telling me, hey, the market wants to go there, but it's not too sure. It's kind of like, hey, guys, those of you out there that are married, and your wife asks you if you want to go to the mall, you're like, yeah, I don't really know. Well, I'm going to buy you some new clothes, and you don't want me to pick them out for you, do you? Yeah, I better go. Okay, not really sure. Maybe that's not the best analogy. Some guys would never even think about going to the mall. But right there, that's where your wife is going to the mall, or your husband's going to go to the mall if he buys your clothes, ladies. That 5 right there says game on, acceleration. There's acceleration coming into the market. Something's about to perhaps drop. And you can see it's exactly what it did. Now it started to slow down with the 3, and a 1 is a sign of an imminent change in direction. That does not mean get out. It just means, hey, you know what? This thing's going to take a breather. It might actually start to come back up for a little bit. Yeah, might actually. It's kind of like the RQ Obos in a sense, right? Archeobus indicator where we see an overbought or oversold market and we see a retracement. Yes, there was a short-term retracement here. And then 5 accelerator coming back in. And then there's the 1 saying, okay, hold up, we're changing again. But we don't trade only on 5s. We don't trade only on 1s. Think of it as, again, part of the mix, part of the ingredients inside the box. Now watch what I'm going to do. I'm going to add 1 additional indicator, which I love. And I'm going to go over here to indicators, and I'm going to add a navigator. I need something to help me navigate all of this action. RQ Navigator. I'm going to add that in, and I'm going to apply it, and I'm going to hit OK. Can't I make it like color-coded? Can't I make it just like a little bit easier to recognize the colors of the actual candles? And by the way, I like to use candles when I'm doing my box trading. I like to see the color change, and we're going to have 3 colors. We're going to have yellow, we're going to have blue, we're going to have purple. Blue is strength. I don't want that. I'm selling the market. I'm coming down into bear territory. You guys with me on this? Bull bear territory. We're coming down into bear zone 1. Here we are, going from the neutral trade zone, showing me strength. Oh, we might be going into the bull territory. Nope. Going neutral, yellow. Oh, we might be going into the bull territory. Nope. Going purple. From strength to weakness. But what is missing? No accelerator. What's missing on this one? Oh, it's back to neutral. What's missing on this one? It's a 3. That's a sign of neutrality. What's missing on this one? No accelerator. Look at this next one. You've got a yellow with a 5. Okay, so this kind of like contradicts itself. You have acceleration coming in, yet by the time it finished yellow saying it's not going anywhere. It's a whole different look. So what's another thing that I can add to help me not guess, but actually know where the break actually is? That's a channel. Okay, so I'm going to put up on the screen right now what I refer to as the RQ channels. So I'm going to go to I'm going to go to indicators in my NinjaTrader, and I'm going to scroll down to RQ channels. And there we go. Boom, boom. Going to add that, hit apply, hit OK. Now, I'm not going to take the time to dial these all in. That'll be done for you when you actually purchase these. We'll get you set up. So what I'm going to do is I'm going to flash up the channels, and I'm going to get my precision inputs done by going to my template that's already done for me, so I don't have to take the time to show you all the nitty-gritty details. But you get the gist of it. Look what I just put up on the screen. There's 1 channel in there, and I actually like to use 2 channels. And so with that, I'm going to go right-click, and I'm going to go down to my template. It's already done. I can always send my templates to you guys that are out there, members. More than happy to send you guys my template. And I'm going to click a template that I already have saved called DMS. That's just what I personally named it. You can name it Wacky. You can name it Winnie the Pooh, whatever you want to name it. I just called it DMS. So give that a second to load. And by the way, if you ever see this, like, hey, where's the bars? Go up to that F function in the upper right corner, click on it, and it brings everything to life for you. Okay? All right. So I'm going to go back to our box. And I'm going to talk about those 2 channels. I added 2 channels. One is a solid, and one is a dotted line. And I want you guys to see what's happening here. They are both coming together right over here. I'm going to put an arrow on it so you guys can see it. Both the channels are coming together. The 5 accelerator gets me excited because I can see acceleration coming in. We had our first sign of life that there's a sell-off coming. We're crossing through, and truth be told, I would have actually shorted the market at this one because I don't know if you can see it, but was that a 3 or a 5? I think that was a 3. Nope, I take it back. That was a 3, but I still would have been selling it here, and here's why. This is the first breakdown in. I'm changing from yellow to purple for the first time, and I'm crossing through a channel for the first time. I'm getting short here. I'm going to repeat it, I do not have to have a 5 to get short. Don't do that. If you have to wait for a 5, you might miss trades. Look at the one that has a 3 on it over here. Look how far down it moved. If you were waiting for a 5 on that candle, you would have missed half the move. I'm just waiting for the market to close through the channel, into the zone, with a purple candle for a short, blue for a long, crossing through the channel. The accelerator just is like the cherry on top. Hey, it'd be great if I had a 5. Turns out it took 10 more minutes until I got a 5, and the market was moving back against me, but then it had that little pullback and then the move. Now, mind you, this is at 9:05? What I just get done telling you guys happened today. We had, let me just get rid of this real quick. We had Powell talking today. And Powell started talking, guess when? 9 o'clock. Powell started talking, and he was talking about all sorts of good things. You guys can go roll the tape back and watch it. Well, that put the market in a sad mood, and the market started moving down. So that's the fundamental I was talking about. Powell talking. Here's the technical that I'm talking about. We have the zone, we have the box, we have the indicators to help us designate an entry point. And again, this is the S&P that got to see this market climb down. An entry point for me, which would have been back 10 minutes before the first time we actually went down in. The first profit target down. So now we're talking about entries. Now we're talking about exits. Now, before I go into the exits in the entry, we got to talk about risk. Here's what's really cool. You had a lot of time to measure the risk to see if you could even afford this trade. Going back to prime time, the beginning, when you're starting to open your store for business, you can measure the channel from the beginning to where the stop out would be. The stop out in this case is going to be the opposite side, up here. Okay? So I'm going to put a drawing here. I'm going to put an X and say, all right, let's measure the X down to a potential entry. What is that? That is going to be, I'll put R for risk. Now I'm going to go over to the far right, and I'm going to tell you guys it was, actually, here's an easy way to do it. I'm going to push down on my mouse. If you have a roller on your mouse, you can do this. You can see the mid up and the mid low in green. The mid low, that's the bear level, 28.66. The bull level, 28.77. 11 points. Now on the big S&P, each point's $50. So there's $550 of risk if I was to go short one unit right here, 550. That is going to wipe out anybody that's got $10,000 or under. You're going to have to trade some micros. No problem. If you got a $50,000 account, you're trading probably 2 of these. If you're trading a $100,000 account, you're going to trade 3 to 4 of these mini S&Ps. And that's on money management, and that's another workshop all in itself. But I want you guys to understand what I'm measuring for the risk. If I'm going to get short here, I'm going to place a stop back up here ideally. Okay. The other option you have is to place a stop on the inside of the neutral trade zone, but that's going to be so close that that's going to get hit. And if I had a shorted here and placed it back on the inside, I would have been stopped out immediately. That's just too close. I like using the lower, I like using the bear level in this example if I'm getting short at a lower location in the zone. Then it makes sense to place your stop at the first level, not way up high. That's a good way to reduce risk, to find a more logical stop to use. So again, making sure you guys were at the the leveraging micro workshop I had last week. 1 E-mini S&P is equal to 10 micros. Okay, leverage is 10 to 1. So if it's $500 of risk approximately, and I only want to risk $100, think about it. If I trade 5 micros, that's 250. And if I trade 2 or 3 micros, I'm getting the risk down to roughly about 100, 125 bucks. So in this example today, we're going to say that we traded 3 micros at this spot. 3 micros. Okay? And the risk is going to be roughly, let's just round it up and call it approximately. And that's not a very good dollar sign. You guys get the idea. Roughly $100. Having to stop right up here. Now let's talk about targets. targets, first target I want to try to achieve is going to be the midpoint. And to get the midpoint, here's what I have to do. I'm going to bring this up. I'm going to go up here to the pencil, and I'm going to get a Fibonacci retracement ruler. When I click on that, I'm going to draw a line or a ruler from the bear level down to the bottom of the box, or the top of the box to the bottom of the box. And what I'm looking for is I'm looking for a profit target right before the 50% marker, which is right here. That's my first target. And what I want to do is I want to take off half of my positions. So if I have a 3 lot, I'm going to be looking to get out of 2 of my 3 units at that point. The last one, I want it to get out down at the bottom, which in this case, as you guys can see, doesn't look like it got hit, not within the box time frame. Now, once you get that first target, which leaves me now with a 1 lot after I get that target, I'm going to bring my stop that was up here, and I'm going to bring that to break even. There's my new stop. It's at break even for the 1 lot that I have remaining. Started with 3, took off 2, took my stop down to the break even spot. Maybe put yourself at a little bit of risk with a couple of points on the inside of the what was a bear level. What was a bear level is now a resistance level that got tested and got stopped out over here. So you made your money on 2 of the 3 on the way down. Now, hopefully some of you guys are picking up on options that you can do here. Another option is to continue to work that original stop. What if you had that original stop and you're comfortable still risking losing on that one solo lot that you have? You would have sustained the pullback over here. And yeah, we can all see what's happening to the right. As the stock market is now at 11 o'clock, it's the prime time. Prime time's over. And this has been an interesting trend that we've seen in the stocks the last 4 weeks. The 11 to 12 o'clock hour, there's been a lot of movement. And it was no stranger to what happened today. Let me just get rid of some things here because it can get a little too confusing with too many things up on the screen. What ended up happening is the market not only went down, back down after it retraced back up to the bear level, but it went all the way back down to the first and second support levels. Now, it's up to you. Are you comfortable keeping your original stop, or are you more comfortable going with the break-even stop? Break even here in this example. Had it not gone through back into the neutral, you would have sustained the pullback. In this example, going break even, you would have been hit. If you were comfortable with the original stop, yeah, you would have actually enjoyed a very nice profit on your last remaining unit that would have picked up that much. You guys can look at the distance. That's an entry around 28.65 with an exit around 28, we'll call it 28.11. That's 55 points in the S&P. And now on a micro, again, let's do the math here. 55 points on a big one, big mini, that's $2,700. And if we just go ahead and look at the difference, it's going to be $5 times 55 points. So on one mini, it's $275 on one micro. Not a mini, my fault. On one micro. A micro, guys. With just one. And again, that's how we build a box to identify a trade. And if you think about the contents that I put up earlier, and I'll put them up here once again, there they are. They're all intact. We've got the levels. We got the prime times for the sides and the tops and the bottom. We got the channels, accelerator, navigator for the color change, and the RQ Tech, which I didn't even show you guys the RQ Tech. I can't go back and tell you what the RQ Tech said then, but I can tell you because I took a screenshot of it today. I can show you guys a trade I did in the last hour of trading today for one of the markets that a few of you guys asked for, which was the Dow. And this would be a micro Dow. So what I'm going to do here is I'm going to start from scratch. I'm going to remove that, and I'm going to go up to MYM. I'm going to change things up here a little bit. Now, prime time I just gave you was 8 to 11. What if you only want to trade, what if you didn't have time to trade the prime time and you wanted to catch the close? Okay, you wanted to catch the close today. Well, today I was looking at the RQ Tech, and I'm trying to pull it up now. There it is. And today, the biggest laggard was the Dow. As we speak in real time right now, the S&P is actually outpacing the NASDAQ and the Dow. But the Dow earlier was atop the S&P and the NASDAQ in terms of the one that was dragging down the hardest. And I was looking at the Dow thinking, well, here's the last hour of the session. Last hour of the session is going to be from 3 to 4. And the Dow is the leader of the pack on the way down. Let's look at the Dow and see if there's an opportunity to take a trade. So let me go actually do this from scratch. I always like doing it from scratch. It's so much more effective. So here we go. Workspace. I'm going to create a new chart. I'm going to go YMY. I'm going to go 5 minutes. Hit apply, hit OK. Give that a second. Now you can see I've got some stuff on the screen. I'll take those off so you don't see early on where I got in. Take the plots off. There's the Dow, guys. Naked Dow, no levels. And now we got to go build a box. So what's cool with NinjaTrader is after you actually have all your indicators dialed in the way you want them, what you want to do is you want to right click and you want to go down to template and you want to save as either your default or save it as something, give it a name. Okay, so I'm going to go place my template for this market and populate that. Turn this off for the moment. I'll pop those back on in just a minute so you don't see anything. And we're going to talk about the last hour of the day so I can get my sides. Okay, last hour of the day. I'm going to go over here. Obviously, the Dow was just like the S&P today, so I don't need to go show that again. Let's cruise over here, and let's look at the last hour. So there's 4 o'clock, and I'm going to go to 2:30, because 2:30 technically is the last opportunity to trade the stock session. And 2:30 is going to be right, that's 45. That's 2:30 right there. So 2:30 to 4. Let me stretch this out and allow me to build a box for y'all. Here we go. The top is going to be what was a support. The bottom is going to be the last level of support, what we call critical support. The left side is going to be 2:30, and the right side is going to be 4 o'clock. There is the box. And before I start talking about specifics on this one, I'm going to take a pause. How we doing, guys? Am I losing you? Are you with me on a scale of 1 to 5? 5, this makes complete sense. 1, this is voodoo science. I don't get it. What's your rating so far, 1 to 5? Be honest with me. I got to make sure I'm not losing anybody out there. I don't get a chance to do this in the trade lab. I'm going too damn fast. We got money on the line. I try to the best I can, but it's the workshops where I want to take the time to make sure everybody's with me. I don't care if you're a brand new trader. I don't care if you traded for a couple of years. You've gotten your ass kicked and you're trying to get back up on the horse. I don't care if you've been trading like myself for 20 years and you're still in search of the Holy Grail. There is no Holy Grail, but you're looking for something to just kind of add and complement what you're already doing. Maybe you're someone that's like, you know what, I got to start all over. I work for all those, but you have to be able to get this, and hopefully I'm going at a good pace. Good news, I got a lot of 5s out there, so that's a good thing. All right, so here we go. Interesting market, isn't it? Because at 12:30, what do we have? A bunch of yellow. We're climbing down. We've already been down into that zone, but here comes the prime time. Notice that in this one, the channels are lower. They're not at the beginning. No, they're not at the beginning. They're lower. And we've had this channel down here for 5, 10, 15, 25 minutes you had to prep a sell stop. 25 minutes. Think about that for a second. If you just got your butt at the seat right at the beginning of prime time, well, you had 5, 10, 15 minutes until you got hit. Look at the color change. Now this is bear zone 2. Make sure everybody's with me. Bear zone 2 is lower. And what are you supposed to do? You're supposed to sell high, buy low. Well, you're not buying, you're not selling high. You're selling not at the very beginning, but a little bit lower into bear zone 2. So therefore, it's going to be a riskier trade. So if you're somebody that is customarily risking, $500 per trade, risk 250. If you customarily risk 250 per trade, risk $125. If you usually risk 100, $125, risk 50. This is where micros are fantastic. This is where minis, and in some cases the micros, are epic because you can trade fewer of them and not have to risk so much, but yet still participate. Are you with me? Pretty cool, right? Okay, so let's measure the risk first. So what I'm going to do is I'm going to measure back over here at the beginning. Okay, what's the distance from here up to the level? That's one risk. We'll call that risk 1. And we'll call the opposite side, we'll call that risk 2. Okay, not to get confused with resistance 1 and resistance 2. Just we'll call it risk 1, risk 2. Now the Dow is $5 a point. The micro is 50 cents a tick, 50 cents a point. All right. So what I'm going to do is I'm going to go look over here. I'm just going to eyeball, roughly guesstimate 23,100 up to the level of 23,187. It's 87 points of risk. 87 points of risk up to the first stop out. And up to the top here, it's going to be 225. So it's going to be 125 points of risk. And I always like to go off of the mini and then I just calculate it down with the micro. Everybody can do math the way that they want to. I'm not going to tell you guys how to do your math, but I will tell you that if I take 87 and multiply that by 5 and take 125 and multiply that by 5, that's for the mini contract. I can get a quick calculation, which I'm doing right now for you. 125 times 5. That baby right there, that's $625 of risk. Woo! That's a lot of risk. I can't do that on a $10,000 account. That's what I'm doing for you guys in the trade room every day. But I can sure as hell trade some micros, because if I trade 5 micros, I'm risking 300. That's still too high. This is a lower zone. So let's trade 2 micros, because 2 micros is about $150 of risk. And on a $5,000, $6,000, $7,000 account, it's a no-brainer. By the way, if you got a $2,000 to $5,000 account, it's a no-brainer. Just trade 1. Okay? Trade 1. Or, you ready for this? Don't trade up at the top. Use the first level for a protective stop. So let's erase everything and let's place a stop at the first level to reduce risk. As I mentioned earlier on the S&P, I'm going to be trying to get in here and placing a stop here. And I'm going to measure that distance, which I just told you is 87 points. So let's do the magic math. 87 times $5 for the mini is $435 of risk. If I trade 10 micros, I'm risking $435. If I trade 1 mini Dow, I'm risking $435. If I trade 5 micros, I got myself a $217 risk. If I trade 3, I just found a way to get the risk down to about $1.25. Trading 3 micros, risking about $1.25 with my stop there. Okay. Now here's the entry. Make no doubt about it. We're changing from yellow to purple. There's the entry. I got my stop, and now I got to place my target. Now I'm going to erase this stuff. I'm going to get that ruler out. And I'm going to place the ruler down from level to level, top to bottom of the box. And you guys are probably already cheating and looking to the right and seeing where the market went. Yes, it retraced. Yes, it went down. Yes, it retraced. Didn't go through. Yes, it went down. It got to the first profit target, guys. It got to the first profit target. It pulled back and sustained a pullback going through what was once a support is now a resistance. And now I'm going to go to data series and I'm going to go over here and I'm going to plot my trades for you that I did today. I'm going to put the text and the marker on the chart. You guys like apples? How about them apples? Now, I did a 3-lot. I got out of 1. I didn't go 2. I went out of 1. I got greedy. I wanted to see this thing go down to the floor today. It didn't get down there. But what did it do? Well, it started moving back up. And what did I do? I went break even. I had a break even stop. I'm going to make these candles a little smaller for you so you can see it. Okay. Went down, got my target. Target 1 went from 23,100 down to 23,026. 70, was it 80, 74 points. 74 points. And it came back up, and I ended up taking the 2 lots off, just about break even. Actually, 2 ticks against me, to be exact. A trade inside the box. So I've done the S&P, I've done the Dow, and now I'm going to go do another market for you that's completely out of left field. I'm going to do a couple more for you guys until we're almost at the top of the hour. I got 7 minutes, so watch how I do this here. You guys asked for the S&P, you asked for the Dow. I'm going to do Bitcoin, and then I'm going to show you the Aussie. Okay? Here comes BTC. Assuming that I have it up here, and I'm just blind. There it is. Okay, Bitcoin. And I'm going to stretch this out. And that's all messed up because of what I just had on it. I gotta start fresh, guys. Sorry. Give me a fresh chart. Got too many writings or indicators on it. I gotta start fresh. There we go. 5-minute chart. And by the way, I always do 5-minute for these are channel trades inside the box. Inside the box. Here we go. Bitcoin. Right click. Go put my template on it. Template with the channels, template with the levels, template with the navigator. And what I'm going to do is I'm going to first of all go over to the London session. Currency, it's a currency, right? It's a digital currency. There's 2 and there's 5. That's the prime time for the London session, 2 to 5. And tell me what you guys see. There's actually 2 boxes. 2 boxes going down here. Box number 1 is going to be in the bull zone. And box number 2 is going to be in the bear zone. Okay. We never entered into the bottom box today. The market came down and kissed the bear, never drove through. So I don't have to talk about that for the London session. Let me stretch this out a little bit more. Did the market ever penetrate a channel in the bull zone with a blue candle? It never did. Only penetration was here, and here, and here, with no blue candle. No trade in the box today for the London session. Okay? Now I'm going to go over to the US session. And I'm going to get the lines up here at 8 o'clock and 11. And that's not the right indicator. Sorry, guys. I don't know what the hell that is. I can't see. There it is. 11. Here we go. Let's go squeeze this. And let's go build that box. Now, what's the problem here? The first bull zone, the market's not in it. Remember, we don't sell in the bull. The market is breaking out. It pulled back. I'm not going to go buy a market at the top of a zone. I want to buy the market at the bottom of zones. So no, I am not putting a trade on here because you're buying right underneath a resistance level. You're buying high. You have to think that the market's going to come back down. That's how you have to think about it. If it doesn't, and it didn't, it continued to go up, you have a secondary bull zone to go buy in. A secondary bull zone to go buy in. So I'm going to go build the box for Bitcoin in bull zone 2. And there it is. Now I have blue candles. The market has pulled back. Market has pulled back, and then it has another run. Problem here is it's turning blue too far up. Guys, I don't like to buy right underneath 50% or right at it. That's exactly what's happening here on the break. It's right below the 50% mark of the box. I want you guys, it is a huge tip. If there's one thing I give you right now, it's this tip right here. Pretend that there is a ceiling, a glass ceiling, halfway into the zones. And this breakout that's taking place is right before that glass ceiling. What's happening is you're getting bulls, but you don't have the real aggressive bulls in here. You've got some people that are saying, man, come on, the market's not going anywhere. It's got to go up. And you have limit orders that are in here waiting for those late to the party bulls. And the limit orders are getting hit and the market's coming back off, turning back to yellow. That's what's taking place in this market today. No good trades inside the box 1 or the box 2 today in the London or the US session. Not with what I just gave you in terms of rules of engagement. Pretty choppy session overall. Now I'm going to take you over to the Aussie dollar. Let's go over to a currency and let's talk about an opportunity there. Again, we'll start with the London session. London session 2 to 5 o'clock. And what happens when the market does this? It doesn't go anywhere. It's just like, yeah, just kind of, just going sideways. We can see that the channel, the upper channel, the breakout upper channel was in the neutral trade zone. We don't buy in there. No, we don't buy in there. There was never a trade on the long side today. There was only one opportunity to sell. And the only way I can tell you if I would have taken that short would have been if the Aussie was one of our laggards. Was it one of the biggest laggards of the currencies? Did we have a mixed or did we have a conflict logic going on? You see, when we have a mixed logic or a bullish or bearish conflict going on, that's when I'm trading currencies. Bullish conflict, I'm trading long. Bearish conflict, I'm trading short. And if we have a mixed sentiment, I'm looking to take currencies in either direction. So I can't tell you if I would have taken that trade. If I'm ignoring the logic, if I'm ignoring the tech, then what have I just done? Am I going to take that just based on the merit of a color? If I do, I'm not a true quant, and I'm totally not participating in all three major fundamentals here, or major pillars of the logic that I've presented to you guys tonight. Now, go forward, and the last one is going to be prime time for the US session, and that would be 8 o'clock to 11 o'clock. There it is. Okay. And this won't take long. You guys can see the box. I don't even have to put it up. Way up high. We don't sell in the bull. We're in the bull zone 1. Look at the channel coming down, coming down, coming down, coming down. Was there ever an opportunity to sell it? The answer is yes, there was. But again, I can't tell you what the RQ Tech was, but let's just assume that the RQ Tech was on your side. There was the first opportunity at 10:20 with 40 minutes left of prime time inside of a box that is bear zone 1. That's the trade. You would have had your stop working above. In this case, since you're a little bit lower down into the zone, you're going to keep your stop up above the first level. That's your risk. I can eyeball that and tell you 64.70 to 81. That's about 10 points. And on the Aussie, That's $100. It's $10 a tick. It's about $100 of risk. On a $20,000 or $10,000 account, I'm trading 2 full units, 2 6As. If that's too much risk, you could trade 10 micros. You got a $50,000 account, you're going to trade 5 lots. 100,000, you're trading 10 lots. Where did it go? Where did this market go? Yeah, multiple targets. Why you want to trade with multiple lots? Because this guy not only just hit one target, which was the halfway target right there, it also grabbed the bottom. Let's go to the right a little bit further. Didn't quite get there, or did it? Yeah, it did. And look what time it did. 3 o'clock. So it started in prime time. It never penetrated to stop you out. And you have some beautiful profit target, halfway profit target being achieved on this trade. I'm going to use an arrow right here. Right. Thank you very much. There's target 1 halfway down and target 2 right there. And by the way, you guys, that first target, 64.60, we'll call it. That's about $125 right there. 125, trading a full 6A. And down at the bottom, 64.40, short from 60. 47. That's about 35. That's about $350 per unit down to the bottom. So if you just did a 2 lot, that's about a $500 trade on a 2 lot in the Aussie. Pretty cool, right? All right, so this is where we are now at the top of the hour. I've gone a full hour. I told you guys I'd answer questions. I'm going to do most of those off the recording. But what I want to do before I finish the recording is I want to flash a couple things up. First thing, the most important thing is where do you go to get your questions answered? Support at riosquant.com is a great place if you need help with your indicators, help with your NinjaTrader with our trade technology. The second place you go if you want to talk shop for membership and indicators, and I'm throwing out a nice little special tonight. Nice little special tonight. Here's the deal. I'm going to put up on the screen here in just a second the package that we have. It's called the RQ 2020. The package is everything that I've shown here tonight. It's everything you need. Members, some of you guys don't have the RQ Obos indicator. I didn't talk about that tonight. That's a different strategy. Some of you don't have the Turbo Scalp. I didn't talk about that tonight. That's a different strategy. But for all of those of you that are new, right? You're new. Members got a kick out of learning the strategy tonight. New folks showing up. You're getting a first opportunity to actually understand our technology, and that's really important to us that you're getting it. You're really understanding everything's gelling really well. That's the RQ20 over here to the far right. That is going to have the levels. That's going to have the RQ Tech, which was the way to see the leaders and the laggards. That's going to have a DMS, which is an indicator at the bottom of your chart that shows you if we have a risk on, risk off, mixed, or conflict. I'm willing to bet somebody here tonight was asking themselves that question. Hey, how do you know what the sentiment is? Well, how would you like it if we actually gave you an indicator that didn't make your brain have to work overtime? We actually just gave you a color and told you what it was at all times, 24 hours, 7 days a week, well, 5.5 days a week for any market. Pretty cool, right? Accelerators. We've got the accelerators included. The RQ channels for the precise entry or on a long or a short. We got the OBOS, which I didn't talk about tonight. That's to help out with some retracement signals. If you like to sell a market that's been doing overtime and you want to get a market when it's going to start retracing, that's something. And then 95% of the trades I do in the Trade Lab is the Turbo Scalp. Again, didn't talk about that tonight. If you watch the trade recap of the day video, you can go over to our trade channel, which is found on YouTube. Just type in the trading room. You can go watch lots of videos recapping. You're going to see a lot of Turbo Scalp trades in there. But if you like the box trade is great for those of you that want to just kind of go at a slower pace, slow down the frequency, have plenty of time to make your trade decision. That's what this is all about right over here at the box trade. There's one indicator that's not on here, and that indicator is called the navigator. So I'm just going to put NAV. So here's what I'm going to do for anybody that makes a purchase tonight. Anyone that makes a purchase tonight is going to get the RQ Navigator to be included in the package. But wait, that's not all. I've got 2 spots open this coming Saturday morning. And if you can't make it in Saturday, don't worry about it. We'll find another time. I do coaching sessions, and they are 1 hour in length. And I charge $350 for these coaching sessions. And they're great for people that are trying to make some tweaks, people that are in a rut, people that are broken, people that are killing it, and they want to do even better. Everybody's got some reasons, whether it's psychological, hey, help me build the trade plan. Hey, can you show me what I'm doing right and how I can make more? Can you show me what I'm doing wrong? That's what the coaching session is for. If you buy the RQ 2020, I'm going to do the first 2 people tonight that reach out to Tim at Rios Quant, the first 2 people that reach out with serious intent of making a purchase, I'm going to throw a coaching session in. It's got to be done within 30 days. And if you can do it this Saturday, fantastic. If you can't, don't worry about it. At no charge. So the $29.95 plus a coaching session plus the navigator for the first 2 people. If there's more than 2, then we can talk about that. But that's a killer deal. That's a really good deal. And the other thing that you need is the $249 a month. That's a no-brainer. That's to attend class. So I've given you guys some education tonight. The class, I should say, the trade lab, that's where we go and actually talk the talk and walk the walk and experiment. I don't like to look at trading as an experiment. That's where we actually get real. We take what we've learned and we go apply it. And that's what I do. I put my money where my mouth is. And, trading in front of people is not something that everybody can do. I've been doing it for years. I love it. It's very rewarding, especially when I can help people make money, help people get out of a rut, which I know a lot of people are in right now, just aside from all the obvious reasons out there. So there's some of you guys in here that have, $2,000 to your name. You're trading micros, and you can lease NinjaTrader for less than $300 a month. You can make payments. There's others of you out there with 10 to 20,000 of discretionary money, and just trade like me, because I'm trading a $10,000 account. You guys have seen my performance. I show it at the end of every week, and it's the real deal. And there's others of you out there with a $100,000 account or more. That's all great. Just a matter of how we make the tweaks in terms of how many units you trade. There's nothing different between a 20, and a $200,000 account trader except for the money management. But we're all trading with the same style. We all have the same profit targets, the same exits. So I think that's really important to make a note of. Outside of that, guys, I hope you guys enjoyed it. Hopefully you guys have everything else you need. Did I mention you need to have a laptop minimum? I mean, go down to Costco, get online, Best Buy, Costco, pick up a Windows computer. It's a lot easier than the Macintosh. I know some of you guys out there are trying to work with Macs. Good luck with that. It's tough. I would just say spend the money, go spend $300 on a cheapy laptop that's got enough RAM. Most of them do now. Enough memory. Just make sure it's got the right connector so you can connect like an HDMI or USB. Those are like the 2 most common things you're going to want for around the house. I think I've nailed everything down tonight, and I know that there's questions. So with that, what I'm going to do is I'm going to end the recording, and I'm going to flash up our website one more time for those of you guys that need it, tradingroom.com. I mentioned the tradingroom.com YouTube channel. Check out the YouTube channel. Do us a favor and subscribe and like our videos. If you don't like the videos, that's okay. You can tell me in an email if you do like them, and just show the support by liking the video after you've seen it. Outside of that, guys, I look forward to having you guys in the trading room tomorrow for Thursdays. Thursdays are what I like to refer to as the Thirsty Thursday for some trading, and you better darn well know that I'm going to be doing some box trading for you guys tomorrow in the room. I'll hang back, answer some questions out loud so the rest of you guys can hear them, but as of right now, we are officially going to end this workshop, and I'm going to officially thank everybody for coming this evening or morning, wherever you are on the planet. I'll see you guys next time.